Is there a recession? Is it postponed? What does that mean?
We are at the end of a super cycle. We have some widespread speculation. We have money printing around the world. I think there is a final move in it. I have tried to promote this, the blow off top. I still think there is one very strong move in the US market at least. But after that, I think things can develop rather fast actually, and I think we will see a terrible recession. I think it's going to be the worst we've seen since 1929.
Well, I think we're already in a recession.
On the gold price, what's driving it higher? Talk to the gold retailers. It's not the consumer. They are wrecked. It is, as said by Matthew, central banks, hedges, billionaires, centimillionaires, big money, nation states, sovereign funds.
There's a lot of distrust and I think fear, and it's just like as the water rises on the Titanic's bow, and it's no longer just a question of maybe we need to change our tuxedos into a warmer jacket. Everyone's looking for that life preserver now.
UK, who just sent them all their gold, it's like the UK wants to be bankrupt. The United Kingdom is the grower. Cayman Islands, Belgium and Luxembourg. If you don't think these are proxies for sustaining the final hour or two of a Ponzi scheme in a state of collapse.
And how does that reset look to you guys? How does that reset look to you? What is that in the form of?
Want to stay updated on the future of finance with exclusive content, giveaways, events, and more? Scan the QR code or click the link in the description and leave your email address behind.
Welcome to this very special recording of the Future of Finance English edition. It's actually the first time we're doing this, and I have to say I'm really proud of myself for having been able to pull an Avenger team that assembled here within a month, literally. Some of you in their very serendipitous. I'm always like, there's a few words that as a Frenchman, it's a bit tough to get. Francis, you actually live a couple of months, a year here. You're actually South African, believe it or not. You were a week ago at the polo event up Joburg.
In the High Veld, somewhere about 3.5 hours from Johannesburg.
Exactly, so that was also perfect timing. Yep. And Henrik, who I wrote, and we basically never talked to each other before, and I wrote you on Twitter, on X, and I told you about this, and you were like hooked. You're like, yeah, absolutely.
Yeah, why not?
Why not? Why not come?
That's shabbier than this, right?
So, yeah, sure.
Mostly to meet Francis and I think, but this isn't bad.
Yeah, exactly, yeah.
So that's beautiful. And to give a bit of context to the viewer, so the Future of Finance is organized and enabled by GoldRepublic and OKX. We've been doing this to, gather like thought leaders in finance, discuss different topics. We'll be talking about macro, gold, crypto, all kinds of assets, financial markets, how to hedge yourself. We'll also have deep dive in gold specifically in a few days. And we'll have also Olaf Dirkmaat and Roy van Krimpen, who are not in this session, but will be in the next ones. And a bit of promotion as well. We give away 5 times 1 gram of gold, so that's worth about 90 euros. I don't know how many pounds, quick calculation here, 70 pounds I would say, for 1 gram of gold away. So you just have to comment gold, G-O-L-D, in the comment section. And we'll be choosing a winner, but the only condition is that you need to have an account at OKX and GoldRepublic. That's the only condition. So now that we have like all the promotional stuff out of the way, I would like to actually start with a small round of introductions of this beautiful Avenger team we have here. Starting from my left, Matthew Piepenburg, you're a partner at Van Greyerts. You're a very respected voice in the gold industry, I have to say. People love your views, you was very spot on, but maybe you wanted to give a short introduction.
Yeah, I mean, obviously, I've come to gold as a high conviction asset for many different reasons, which we'll all share over the next few days. My background originally, real quickly, was in the risk asset space during the dot-com bubble of my generation, the 90s. This was a crazy time, the dot-com everything. That was an interesting lesson in highs and lows and bubbles and asset class kind of perversions. And then I went from really winning a lottery ticket in a very lucky trade, an IPO, a pre-IPO, to running a family office. And I was on the buy side for many years, allocating to other portfolio managers and kind of smell testing the good, the bad, and the ugly in that space. And I was more interested at that point in my life in how to preserve what I was lucky enough to have. And then I looked at, where do you go in times of not just of market risk or market hedges, but currency risk and banking risk, which is all creeping up on us now. And I didn't become a gold bug, I just became gold informed. And then I was looking to allocate some money into gold in Switzerland. I met Egon, we got along very well, and I decided not just to be a client, but be a member of the group. And so we'll have a lot to discuss about gold and risk assets and cycles, but I was basically a very lucky trader and then an allocator, and now I'm a very high conviction gold investor as wealth preservation more than a speculation asset, and a long-term thinker on gold. So that's my quick short background. Yeah.
Thank you. And we have also Henrik Zeberg. You're also a macro economist, and you're also an advisor to Swiss Block. Maybe you want to say a few words also about your journey and what brought you in finance.
Yeah, sure. So I actually come from not from the financial industry. I come from a consulting background. So and I'm a macroeconomist from the University of Copenhagen. But for many years I worked as a consultant with AI in the later years. And then, over the last 16, 17 years, I then started to dive more into the financial industry, very much triggered by the financial crisis, where I probably was a victim of, kind of didn't see what was coming, like so many others. And then woke up and kind of looked at myself and say, well, how could it be that it could go so wrong? So from that on, started out my own journey in the financial industry, building my own model, my way of looking at things, which combines, you would say, different techniques, and some will be more technical, some are more fundamental, basing it on a understanding of the business cycle, the way that how I see it. So I kind of like to look at myself like a Bruce Lee of the financial world, pulling in the different kind of martial arts of financial analysis, and then using it in a kind of a combined way. I hope it works. It seems to work, and there are some things that are going well. When it comes to gold, well, I'm maybe different from what most people think. I'm also in the long term, seeing gold as the asset for wealth preservation. I think there is a lot of speculation these days in the world that is actually the very problem of the world at this point, and I think gold again will come to shine. And it's more about when or where are we in that cycle, and so where we have a pull back first in gold, and but come after that, well, being in gold is absolutely a must.
We'll keep all the juicy details about that for
sure.
later in the conversation. Mm-hmm. And last but not least, Francis Hunt, or de facto actually country host, because this is your country, this beautiful country, and I want to take this moment to actually just share how well, we talked about this before, but I want to say it on camera as well, how I love this country. I mean, look at the views, the people, the food. Everyone is super kind to you. The service for a fraction of the cost of what you would be able to buy in Copenhagen or in Amsterdam, and with those beautiful sceneries. I mean, I hope these cameras can actually really catch this depth of view. But you have the mountains. We're here in Constantia, where we're able to host you and record like those conversations. What about your journey? You've been 30 years in the markets. You have your YouTube channel called The Market Sniper, where you share all those insights that you have. And you also interview quite a lot of very interesting guests. Would you like to share a few words about that?
Sure, yeah. Well, firstly, thank you for picking to use our country for this event, and we're delighted to have you, and we welcome you to Africa. Mm-hmm. And I enjoyed the great guests as well that I'm enjoying to share time with. I love the Bruce Lee. I was a massive fan of Bruce Lee. My only concern is while I aspire to be the Bruce Lee of finance, I probably turn into the Forrest Gump of finance. I step in the brown stuff, and things just tend to happen around me. But yeah, my history, short take on my history is essentially I preferred the idea out of inherent laziness to see how money works for you rather than work for money. And I noticed, when my parents were working, that they had investments during the 87 stock market boom that were going up, whilst my father was going and toiling for a very long time in the day. And I thought, well, that's the more interesting side than the work side. So I was inherently lazy, inherently greedy, and desperate to get social standing, that a fast car and nice stuff would acquire for you as a young teenage male.
Yeah.
But that grew and developed, and I recognized patterns, and I started to seek to understand the macro fundamentals of how the systems work. So I started interviewing and talking to some of the people you've referenced, and I learned a lot, and I developed a unique methodology about how I look at charts and why targets are targets, and how best to participate in the market so that you can get asymmetric rewards with limited, properly managed risk, because I failed horribly in that in my early endeavors in trading and investing. So that's kind of my history that brings me largely to today. We've been lucky enough, we've been able to call from big macro moves. So I especially like these kind of discussions where we zoom right out. We've got a beautiful aspect here. We're looking at the whole lie of the land. And I like being that eagle in the sky, call it a bald eagle. I suppose you have to go with that one. But overseeing the whole lie of the land and understanding. And then you're a futurist of what comes next. That's the big answer. Look at all the information, because the seeds of, the outcomes of tomorrow are in the seeds of today. So inherently, there are things that we can actively recognize and exploit in advance of them happening. And that's where you get those asymmetric rewards with super tight risk for investment and careful, judicious use of leverage. So that's my story.
Beautiful. So talking about actually just that, because that's exactly how I think we should start this conversation, is lay the foundation of understanding where are we now, and maybe also give a bit of context, but not stretch it maybe too far, because we only have a certain amount of time we can cover things. So where would you say that in terms of foundation and where we at now in time, and looking at maybe the debt cycle or different frameworks, we are now? And maybe Henrik, you might start sharing your views on that.
Well, I think we are at the end of a super cycle, I would say. I think it's when I look at it in a technical perspective, if you look at it in a historical perspective, then I think we are at a time where we are. I don't want to say it. I don't want to sound like some doomsday kind of, but we are at the end of a big thing here. We have some widespread speculation. We have money printing around the world. It's like, everything can be solved by just printing money. So every time you suggest that you can have a decline, you'll say, yeah, but they'll just throw money at it. And we know that can continue. We are actually starting to see inflation is moving up around the world. And I think we have for the last 16, 17 years here since 2008 been living in a world where we solve problems by kicking the can. And I think there is only so much kicking that can be done before you actually get to the point where you actually have to pick it up or do something about it. And that's the place we are at. So I'm not saying we're there just yet. I think there is a final move in it. I have tried to promote this, the blow off top. I still think there is one very strong move in the U.S. market at least. But after that, I think things can develop rather fast actually, and I think we will see a terrible recession. Actually, as I said also in other interviews, I think it's going to be the worst we've seen since 1929. Not worse than, but since, because I think we're probably a little more equipped today than we were back then. But it's going to be bad because we have been blowing up values in all sorts of assets, and that's what has been driving growth also. And so I don't see a good end to it. I think that we will finally see that that the water will start to move out. Inflation will come in. It will actually limit the effect of what the Fed and other central banks can do, and then you will see the effect of that. So I think there will be a bad recession ahead of us. But again, I still see that we have a new, very strong bull rally going from around these levels here.
Mm-hmm. And I think also you've been saying that or sharing that view since a few years, right? If I look at some interviews, you've been announcing that there's deflation that is coming ahead. Yeah. And obviously that's always the trillion, quadrillion, quazillion dollar question.
When?
Is when,
yeah.
Right? And it's, I think, maybe more interesting than to see what are the indicators, what are the data sets telling us, what should we be looking at in terms of those warning flags that announce this recession?
Well, I think for the first, for that we as you also mentioned, and that we are now finally starting to see yields are moving up. I mean, for the last 40 some years, we have seen yields just moving down, keep moving down, because we actually, the popular saying is that Volcker killed inflation, and I think it's more about the cyclical nature we have of debt and yields and how they move up and down. Mm-hmm. But you actually see that I think we've come to the end of that. That doesn't mean that yields are going straight higher from here. And I know Druckenmiller and others are talking about shorting the bond markets. I think that the recession that I think we're heading into will actually push yields lower. But I don't think we're going to get a new low on that. And this is the thing this is one of the indicators that we are actually getting to a point here where there will be no free lunch any longer. I mean, then in 2008, you had the opportunity of actually starting to print money. The Japanese have done that, or Japan, the Central Bank of Japan has done that many years. And you can create a sensation of wealth, or the illusion of wealth, but it's not the same as wealth. You can create a bubble moving on into various assets. I mean, you can't tell me that many of the meme coins or cryptos that we see that they are actually a real value. So, and there will be a lot of other things also. You've seen private equity companies around the world just scooping up everything they can just to find that yield, the return for their investors. And I think that is going to come bite us now. And that's why so what we really should be looking at now is for the recessions, the start of the recession. For me, that's the short-term yields. That's one of the indicators that tell me that we're getting there. So the 2-year yields, when they start to decline, I think we're getting closer to that moment. And there are certain levels I think we'll start, and especially the momentum of it. That's one of the things where I use techniques for the macro indicators. When we start to see a certain momentum to the downside on the 2-year yields, that's a pretty good time to see the recession starting. Mm-hmm. And then I have a lot of leading indicators in my business cycle that tells me that we are getting to that point. So the only thing that's standing between that now is the U.S. labor market, and if that is failing us, and I think it will at some point, because also what we see in the housing market, then I think it's the onset of things. And the free lunch is not there any longer. You cannot just print wealth again, as some have tried in the last 16 years.
Do you have anything to add to that, Francis?
Yes, a lot of good points made there. My framing is this is a debt-based collapse. That in 2020, the August call that we made, that was the end of the 40-year bull market in bonds, has far more other knock-on effects as a call. It's probably the most significant event on account that it's going to be the right sizing of America, and I think by association the West, that means the UK, Europe, and the Commonwealth nations as well. And it just means America's bottomless overdraft credit card has been pulled. And we're seeing this politically. Everything that you're seeing, that's current narrative and Twitter wars with Doggy, Elon and Trump, that brings everybody into the more superficial realm, is actually about right sizing. This is the elimination of waste. This is the downsizing of the American civil service. I see the military industrial complex at 1/10 of its size when this is entirely done. So that means an immense amount of cutting and reduction, including the new defense minister even said people that are non-core are going to be let go and all of this. So actually what's happened is this is the first government. It's kind of the oil tanker is almost on the lighthouse. It's 200 meters away, and the first time the captain is saying we really should try turn this oil tanker around. It's too little and it's too late, and the repercussions of the withdrawal of that state expenditure is going to deliver the unemployment that Henrik is looking for. In fact, if you superimpose the yield curve inversion and the unemployment chart, I'm visualizing it in my brain, it would be great to give it to you to insert at this point. You actually see that the yield curve has reverted, which is the key event that is normally associated with the eventual triggering of what we call a demand destroying event, which will be what some people call disinflation or deflation in various forms. Only thing I would, so much in common with Henrik, but the only thing I'd say is it's closer, and this is a dangerous call, but it's closer than many realize. The final unemployment shoe to drop is going to come around on the right sizing of the American state departments. And there's going to be knock-on effects in that. That's unemployment, people who can't make mortgage payments anymore. That's going to have, we're already seeing the consumer in great stress at the moment. We're seeing PPI prices going up. So you're seeing the inputs on production getting higher. That's going to push the CPI up as well. You've got the manufacturers expecting to have to raise prices but seeing weak demand at the same time. You can't define stagflation any better than all these consumer-based indicators. And the long-run notion that Mag 7 survives this, if Amazon still gets over 50% of its revenue from online purchases, not all AWS to the military-industrial complex, it gets it from consumers buying books and weed trimmers and everything else people buy on the one world internet company. And they're going to see, understandably, a major downturn. And you have a hyper-valued stock market because you were introduced into a binary world where there was two asset classes, the 60-40 portfolio, debt and equity. And as debt has failed, falling 50% since that turning point, you've seen hypervaluation, the liquidity sloshing into the equity market that has led to an overvalued stock market. So neither are attractive. I will point out that the TLT, which is a long-term ETF, has record shorts now. And usually that tells me it's too crowded a trade a little bit. We were 4 years ago in our call and we took puts right up at 160. It's now at about 80 on the TLT. Druckenmiller and Paul Tudor Jones confirmed their shorts only the back end of last year. I do think that will win and we will see a full contagion in debt, but I first see a little bit of a rally. And just recently, again, Henrik is right about the rates getting higher, but just recently we've seen a little bit of a slip back on rates. So I already feel a little bit of risk off vibes. So I'm not sure we even get the blow off. That's the only differential I would add to Henrik, and otherwise I concur with a lot of his views.
It's also really hard to keep it focused because there's so many aspects to it. And maybe the blow off on top is also kind of what I'm feeling is the sentiment at the moment is, did we reach that moment? But then that should actually be a moment of euphoria when there's so much euphoric feeling about the bull market that then it blows off, which is maybe something we'll actually keep for later. But maybe back on Matthew. When we talked before on the phone, you were saying I see really there's a big problem and it's third-party risk. What do you mean by that?
Let's think about counterparty risk,
counterparty, yeah.
Which is tied to everything we're talking about. And as I was listening, again, we were going to agree and disagree. For example, I think we're already in a recession. I can go into that, but and I've been arguing that actually for a couple of years. Some say it's postponed, and we can look at some of the indicators. And I was watching a movie that I love. It's an American classic because it's a baseball movie. It's called Moneyball. It's based on a true story book. And Billy Beane, the coach of this great team, says, "How can you not be romantic about baseball?" And as I look at debt, how can you not be perplexed by debt? Because everything starts there, whether we talk about the bond markets, yields, recession indicators, counterparty risk, currency risk, precious metals, crypto, whatever we're going to talk about, including counterparty risk and distrust right now in a world kind of no longer waiting to be theoretically in a problem, but in a problem now. It's fascinating. And it all starts from the debt and this notion that you can solve a debt crisis with more debt. This fantasy is no longer holding true. It's amazing that it was even acceptable when it was working. It's again like saying a martini works and it's healthy until you have 15, and it still works until you have a Bloody Mary and 3 more. But to think that that's not bad for your liver or the morning after is naive. And yet we've been selling this for so long. And that goes to your question about this counterparty risk that's been on my mind. Because I think there was a trust in fantasy post-2008, post-Bernanke, that we can solve a debt crisis with a little magic button at the Fed and add a zero to a balance sheet every now and then to buy our unloved, unwanted IOUs from sovereign country X, sovereign bond Y. Absolutely a martini effect, a steroid effect, a dopamine rush. Absolutely great for risk assets in the top 10% of every country's ultra wealthy. Very bad for the middle class. But this idea that this lie, this fantasy was credible, that this fantasy, modern monetary theory is neither modern nor monetary nor theory. It's failed since the ancient Rome, through Weimar, through Yugoslavia, to South America, to today. So there's distrust now in the official narrative. There's distrust between the East and the West since we weaponized the U.S. Treasury in 2022. We're not going to the rabbit hole of whether Zelensky is George Washington or Putin is Hitler 2.0. It's irrelevant. The weaponization of world reserve currency was a mistake, I think. I think that had massive ramifications on the trust in this supposedly neutral world reserve asset. The obvious ripple effects of that from the BRICS, 45 countries now trading outside the US dollar, 30 countries repatriating their gold into their own borders now. Again, you can say that BRICS is sensational, de-dollarization is sensational. We can talk about that all day long, and there's some truth and falseness to that, but there's rapid changes. What's happening in the petrodollar market? oil sold outside of the petrodollar. There's 20% global oil outside the petrodollar. What's happening in the COMEX? Do you trust your gold in a New York warehouse or a London warehouse, or do you want to bring it in? All of these things, where we could spend an hour on each of these silos, have to do with no one trusting each other or these other currencies or other bonds or IOUs or even risk assets in the same way. And because of that, everyone is now looking for that life preserver because they don't trust each other. Geopolitically, we have all kinds of issues. Whether you think of Trump even, there's a concern about, is this guy, he's refreshingly blunt, he's refreshingly active, but he's a bull in a china shop. What's he going to do? How much of what he says does he mean? We're all trying to interpret his Trump speak. There's a lot of distrust and I think fear. And it's just like as the water rises on the Titanic's bow, and it's no longer just a question of maybe we need to change our tuxedos into a warmer jacket, everyone's looking for that life preserver now. And I hate to say this, but of course we all agree somewhat on gold is one of those life preservers. We want something we can trust more than an IOU from Uncle Sam. We want something that we can hold ourselves within our own jurisdiction. We want what the BIS is calling a new tier 1 asset instead of that risk-free return, which is now return-free risk based on inflation of the 10-year. So it's not a gold bug argument, it's history in motion. There's distrust geopolitically, there's distrust financially, there's distrust within our own government. That's why US aid and Doge are making headlines. There's distrust between cryptos and gold. There's distrust between cryptos themselves. There's distrust in politicians within their own country. All this distrust, everyone's looking for that life preserver. And one thing that people are looking to as they're worried about their currency, their politician, their counterparty, their COMEX exchange, whether it's London or New York, their private versus banking vault, their ETF versus their owned asset, is ironically this pet rock, this analog joke that everyone's been ignoring for years and that a few sophisticated investors have been tracking for generations, is now making the headlines again. I don't think it's gold bug, I think it's history. So again, all of this comes down to these counterparty concerns. It doesn't mean that gold's the only asset. It doesn't mean that gold only goes in a straight line. That'll be something Henrik has really fascinating points on that we should discuss really carefully. But the very fact that gold is getting attention, that's always kind of a bad sign, actually. That means trust in just about everything else is falling. And I think that's that counterparty risk. It's all about trust. And where do you look right now? Trust is falling in a lot of different levels. And you can unpack that at just about any asset class. But that's how can you not be romantic about debt? How can you not be romantic about gold right now? How can we not be romantic in a kind of schadenfreude way about what's going on in the world? And it's fascinating to see play out.
And also, like, you're all familiar with Ray Dalio, right? He wrote a couple of books, and he described this also as well, like in terms of empires. When we look at the way the world is, ruled by the U.S. ruled system, which was, you could say, in the financial system, started with Bretton Woods. It's kind of starting with also what you mentioned before, start to crumble. And Trump might also be the pin that actually either accelerates it or maybe like deviates it, but the direction is pretty clear. It is actually going downwards. How do you think that this, what are the indicators to that?
I think also that if you talked about this with the weaponization of the US Treasury, and I think there is absolutely something to that. And that's why we're also seeing that response in the world, and we see the BRICS, and they starting to move on that. And I think that the whole umbrella, the Pax Americana that we have been living under, has been due to the fact that you had a reserve currency, you had the US dollar hegemony, and we could, the US could actually be spending all this money because we all supported that. And I think with all the distrust coming into the system now, also across Atlantic, you will probably see that there'll be a shakeup of all of that. And I think that is why I absolutely agree with you also, and I think we all do, and that gold will have a central place here with that. I don't think, like many people seem to believe these days, that crypto or Bitcoin will be it's simply unsafe. I mean, again, it's down to, there's a reason why the central banks of the world, they have their gold, and they're taking it back home also, and you want to hold it because by the end of the day, it's about show me yours, and then I'll show you mine, and then we'll see who has the biggest one. When it comes to gold, it's actually size that matters, right? And it's and that will be also in the new world where we will see some kind of a new Bretton Woods. I think I talked about the the new deal in the new monetized world. So we will get a monetized reset there. Monetary reset is what I'm trying to say. Monetary reset, where we simply need to get the trust back into the currency of the world, and there is not a lot of trust in that right now. It's been weaponized. It has been over printed, even though people call it's not printed. But you can just look at the balance sheet of the Fed, and so. There is not that trust any longer, and I think that is needed. And I think there is actually now a vacant place in the world. I mean, I put on Twitter the other day. I said, well, why, Europe? We need to, why don't we get the euro actually to start, build, gold positions in the central banks of Europe and starting having, let's focus on getting a strong currency here. Because then you'll have capital coming into that. That was what you saw after the Bretton Woods also. The US obviously had central place in the world back then, half the production of the world, half the amount of gold in the world at that point. And then, taking that position. Right now it's up for grasp, I would say, because it's been misused. And I don't want to tread on anybody's toes here, but it's actually what's been happening. And that's why, so I think there needs to be some kind of revitalization of things. And obviously it was done in the early 70s also with Kissinger and the petrodollar and all that created that demand for the gold for the dollar. But even then that can come to an end. But right now, I mean, I don't see the dollar is strong. So we don't see that de-dollarization. But we see the ripple effects of distrust in society and in the economy. And I think actually that is probably where crypto can come in and the whole blockchain, and that you can have the checks and balances on ownership, and it's like that will probably in that new monetary reset maybe become something. And I know people don't like when you talk about central bank digital currencies, but I could definitely see something of that with a gold backing to it as a solution. But for me, we are further down the road there, and that's where I'm absolutely also agreeing that we are closer to it, but it's more the sequencing of things. And I think that what we're going to see first is that the extreme valuations levels that we have now will come crumpling down. You're going to see a lot of misery or a lot of pain when you actually see the deflationary effects coming out of when people start to lose their jobs, unfortunately, and crypto is not what people think, and you'll start to see that also stocks coming down, which are at extreme levels. I mean, if you look at the market capitalization to GDP, we have an extreme level on the US equity market there, right? So I think you will see that effect first, and then I think that the geniuses of the central banks will come back in again with their guns blazing really quick. That's what people are saying to me also. But they will not allow a decline. They will not allow the economy to fall into a recession. I think it will start to happen. It'll begin to happen because nobody can prevent it. It's part of the cyclical nature to the economy. But then they will come in and do it again, and that I think is what will offset the whole thing, the stagflationary development. So I think that's where I've said I stand in the camp of deflation first, because you're going to see the economy start to develop, and they will be late to the party, just like they were late also,
scan the QR code or click the link in the description
in hiking rates and also in bringing it down, because they focus on inflation as one of their
but I think that this idea that you can solve the economy or solve the markets like a thermostat, whether you're hawkish or dovish with rates or balance sheet expansion of the money supply or the cost of money through rates or Fed funds rates, is just, I think that's losing its bite. And this question of the Civil War, this kind of nonviolent Civil War, this dichotomy in America as the American in the room, I'll say, this goes back to your actual first question, our discussion on is there a recession or is that postponed? What does that mean? We're waiting for the NBER to tell us there's one. What are the indicators of a recession? Look, you can look at yield curves, as you mentioned, Francis, that kind of inversion, then re-up, and then what that indicates historically since World War II, that always indicates recession. Shifts in the M2 money supply, the Conference Board leading indicators, always right. And then there's other things that are just less sexy Wall Street. There's things like 13-year peaks in small business bankruptcies in the U.S. Right now, the credit card delinquencies in the U.S. are reaching where they were during the 2008 crisis. Car loans that are failing. That's also a graph you can put up. This is what's bothering me the most about the recession, waiting for the official notion. Because if you're in the top 10% of the U.S., which frankly I am, and I didn't grow up that way, I was born in the bottom 10%. But when you're in the top 10%, you forget that 90% of that inflated wealth, which is directly correlated to the Fed's easing and the Pavlovian dovish Fed since the great financial crisis, where many millionaires became multimillionaires and then some billionaires. Well, they're doing just fine. And the other thing that Ed Dowd brought the other day is at the bottom 10%, whether you're really poor or you're a legal, illegal immigrant or asylum seeker, you're doing fine too, between hands out and welfare. The ones that are getting crushed right now is the middle class. They're in a recession by every metric and by every experience. There's a great singer in Virginia named Oliver Anthony, wrote a song, hit millions, hundreds of millions of hits because he's speaking to the American experience from Virginia, but that's true in Texas, Iowa, Michigan, Ohio. Everyone there who's struggling to beat inflation, which we all know is a fiction, misreported by probably double digits, they're not breaking even. They're in a recession. They have 20% of Americans in the middle class have one job that pays for just their rent. So then they have to get a second job to have anything else. Now that may not be 50 or 60% of Americans. In fact, that's 20% of Americans is appalling. So you can look at the graphs, the details, the percentages, but then also, as you get the chance, and we all have, drive through Tennessee, Michigan, Ohio, drive through the outer parts of Philadelphia, drive through not Palm Beach, not Park Avenue, not Madison Avenue, not Martha's Vineyard, or not even Nantucket. Go into the real America where the middle class, who Walt Whitman always said is the backbone of every nation, and they are in a recession. Again, using fancy Wall Street jargon, using credit cards, using business bankruptcies, using car repossessions. These are horrible things for the average person. So that creates a civil tension, that creates two Americas, that creates more counterparty risk with each other. And ironically, Trump the billionaire spoke to that middle class in a better way than the traditional parties did that were supposed to represent them. Again, I'm not getting pro or negative on Trump or pro or negative on the Democrats, but the ironies do abound. Again, it goes back to this counterparty risk, trying to find a new fantasy or a new solution to a problem that is not solvable now. The Titanic will sink. There are some lifeboats. Not everyone gets to survive this. There will be another day. There will be another voyage. It's not the end of the US dollar, to your point. On a relative basis, I'd still prefer that over a lira peso.
Oh yeah.
And it doesn't mean that gold will save all these problems either. But there is clear counterparty risk within our own society on a class level, on a political level, and then and then you get into the market level. It's not going to be solved easily with more QE.
No.
It's not going to be solved easily with more dilutions. Anyway, so I had to throw in my American perspective on that. But
and it's again, it's the financialization of everything cycle that needs to end. So the counterparty risk is based on, again, the debt. And the debt is based on everything, because it's in cars, it's in homes, it's in hypervaluations, not just in the stock market, in property as well. It's in commercial property, residential property. Everything is overextended. So the reason why I'm such a doomer on the West in terms of a downdraft, to the point that I actually say most citizens should leave Western world and see this out somewhere else, because it's going to be so dark, it's going to be grim, and a lot of the talent will leave once they see it happen. You see, being successful in investing is often the recognition of the future environment and then your personal positioning therein. It doesn't mean you have to be a brilliant executor. I can be a brilliant surfer, but you put me on a flat sea, I ain't scoring any points for surfing. But if I can position where there's going to be a great rip, I know we have a surfer in the house, and the conditions are going to be right, and I'm a moderately decent operator of my surfing technique, I'm going to have a great ride on account of positioning. And my view is you need to sit this out. And I want to tell a story about 2008. I had a friend who said, you know, throughout the business cycle, when they bottomed out, they spent all their money that they'd made in the good times, they marketed like hell, they grafted like hell, they lost money like hell. He said, if we just shut the business for 5 years, gone on holiday to Thailand and come back and kick-started and said, listen, we're taking a long work, what do you call it, sabbatical, and done that, they would have had a better time, they would have come back healthier, fitter, well-rested. They were thrashed, they were exhausted, and then they had to deal with this really limp recovery. And I'm saying to you, you're going to face that in the nation state where you are. There's better places to see this out, because the undoing of a financialization of everything has multiple cuts and repercussions. It's like that company that's failing that has one set of layoffs and then comes and does another set of layoffs. The morale gets destroyed. There's another set of layoffs. Then they sell off one of the core businesses and they try cuddle around the one they think is the best. Only that then has reduced demand and they're no longer seen as a scale provider. So they have another set of layoffs. And I mean, it is just morbidity. It's like watching friends die in an economic sense. And my argument is that extreme that I actually say, watch this from a distance rather. Because to unwind the debt at a consumer level, a business level, a municipal level, you've got to talk about the states, you've got to talk about the municipalities. California's bust, a state level, and then the governmental level. Every single one is now being unwound, and it's being led by the new leaders that are doing this efficiency that I referred to when I first spoke. So when you deleverage a system that is hyper over leveraged, this is a net drain of all forms of liquidity. So that means hypervaluations crash. I mean, you want to buy a Ferrari, that most Americans have got finance on it. Wait till this unwinds and they'll be going for a third of what they go. But when you look at the prices of that, fancy sports cars, I watch them every now and then. You know, there's a 4x4 that it costs over 500,000 before you spec it in dollars for a 4x4. I think you'll pick that up for 140 in 3 or 4 years' time. Maybe the mileage will be a bit higher because it isn't an asset. It's conspicuous consumption. And we went into this whole world where we threw everything away and we just kept buying because we had the Goldilocks period of offshoring our workshop. The biggest failure of the Western nations is letting their manufacturing sector die. We offshored workshop to Thailand, China, etc., etc. You take the UK and Europe particularly, UK is one of the worst, lost all its manufacturing, in essence became a financial service sector solely. So now you have more lawyers telling you how you can do a fancy derivative on a market that's no longer probably even going to be run because it's got to be deleveraged and flattened. They're in the wrong game. They're in the wrong game. The US led too much manufacturing, and if we look at the current political spectrum, I actually think Trump wants a weaker dollar, but he'll never say that because he's bullish and he's pro-American and that's dollar strong. He wants to bring manufacturing back. That's why he's looking for resources in Greenland. He wants to make Canada the 51st state and all these funny stories. He's realizing he needs resources, he needs mining, he needs manufacturing. He's talking about oil, dig, or what is it? Drill. What of the thing? All of these aspects are, it's time to have resources under your own control. It's time to get back to base level manufacturing, which is mining, and more sophisticated production. And you look at the car makers, the car industry is a wreck, it's a mess. The US doesn't export. If they lose their financial engineering, Ford, GM, they go bust. You know, you can't sustain it. They've got pension pots too big. You look at what the Chinese are doing with the battery cars. So everything I see is a huge downdraft. You know, my father was a glider pilot, and you get into thermals and you get free lift. And then there's downdrafts where you can be smashed into the cliff face, and we've got a nice big mountain here with helicopters putting fires out as well. Don't get caught on the downdraft. You could be the best pilot in the world. You can be the best 747 pilot in the world. If I hand over the cockpit to you when we're in a 45-degree dive into the side of that mountain with half a second to go, it doesn't matter how good a pilot you are. So my whole view to everyone watching this is recognize the environment, think about your positioning. You don't have to take the punch that's being thrown your way. You can rather sit in the back row and watch the boxing match from behind. You don't have to take on Mike Tyson. And in terms of what's coming, macroeconomically, it's going to be a battering. And it's Western world particularly, and the US is going to feel it. And if you just want to understand, the British was the sick man of Europe for 2 decades, and that was a friendly handover of power between the pound to the dollar. This is going from a unipolar world of dollar hegemony to a multipolar world of antagonism. And we are deglobalizing. That gift that gave us that low consumer expenditure, that pushed the consumer culture and the throwaway society, is being reined back. We want to reshore manufacturing. All the scale benefits that we got are now going to be coming back and going to be unwound. at the same time as you're deleveraging. How does that not turn out into an absolute brawl where the only thing that happens to you is you get beaten over the head with a pan and then get arrested for causing a fight later on? I don't want to be in that party. I'd rather go somewhere else and watch it as a movie from a safe seat, and that's where I stand.
But if there's one thing central bankers fear, then it's deflation and that kind of unwinding that you're talking about there. And I completely see it as well. I think it's absolutely right. The analysis is right. I think there's just a factor of that there will be a fighting back. And I think that's what they're going to try. So at the end of it, I'm not sure that they have that kind of understanding that they actually will not be able to win that fight, because you're going to see that we are now at a completely different point than we were in 2008, where there was an ability to create a free lunch. I think that's where I think the deflationary pressures is not going to come out fully. I think there will be a part of the deflationary period of that, but then there will be a fighting back, and the fighting back will be more printing. And I think that is actually why I think the stagflation is going to come from, you also mentioned, right?
The key with more printing is who's going to buy the debt now that the cycle's turned. That's why I say the credit card has been pulled. The asset category is being devastated, and it is the main driver by gold. Can I make one extra point? Sorry for intervening though.
Nice.
Is on the gold price. What's driving it higher? Talk to the gold retailers. It's not the consumer. They are wrecked. It is, as said by Matthew, central banks, hedges, billionaires, centimillionaires, big money, nation states, sovereign funds. That's what's driving it. It's the nations that are doing it. We have a wrecked consumer, and it's on account of not wanting to hold. Who is buying the US debt today? Have a look at the numbers. China is down, even Japan is down. UK, who just sent them all their gold, it's like the UK wants to be bankrupt. The United Kingdom is the grower. Cayman Islands, Belgium and Luxembourg. If you don't think these are proxies for sustaining the final hour or two of a Ponzi scheme in a state of collapse. By the way, and there's some guys that tweet, oh look, everyone asks who will buy the debt, foreign holders are up. Of course it's up. There's ever more debt coming. There's 9 trillion in rollovers due this year, on top of the excessive expenditure. There is no space to put all the stuff.
Well, that means
you can't have value if there's so much of it about.
To this point, we're already at that Gettysburg, Waterloo, Stalingrad moment. The war's not over, but we know how it's going to end. And I think the idea that the Fed can fix this, or a central banker can fix this with QE.
I don't think they can.
No, I know.
Okay,
I think the idea that QE will work, that's like saying that one more martini is going to make you feel better. Actually, it's going to make you throw up. And I think that's the real interesting reality we're hitting now, is the old tools aren't really working the same function. Even the man on the street is starting to figure that out. For a lot of different reasons, they're figuring that out. And that's and that's why this deflationary moment can come in 2 forms, right? And you're eloquent about this in the markets too, and you guys track it momentum-wise, technical-wise. I look at it more historical-wise, but it's all saying the same ending. You know, Bob Farrell wrote about this. It's the most ignored force in the markets is the power of mean reversion. We are so far from the mean now of what a normal market, and you can get into Buffett indicators, you can look at Bollinger Bands and Keltner Bands, and you can look at and all the things you guys are eloquent and fluent in that I used to remember, but we all can, you know, if it looks like it, tastes like it, smells like it, it's a duck. And this is a massively mean reverting timing that's going to be very hard. The other thing that's very deflationary is raising rates to fight inflation, which we can't ironically ever do.
And can I say one thing on top of your mean reversion and before handing back to you? The greater you extend above, you don't revert to the mean, you overshoot to the underside ever more violently, which is why I'm saying you're going to watch one of the worst downdrafts that even if you're the best pilot, you're smashing
exactly.
into the cliff face.
And so the idea of what's going to fix it next time won't be let's try a little more QE, let's try a little more steroids, let's try a little more Lance Armstrong, let's try a little more dopamine.
The debt market falls to zero and the interest rate spikes. You get a short absolute spike in the dollar. That crushes all the offshore dollar debt markets, that you know, the economic hitman nations that have all borrowed in the dollar, and it's contagion, and we get our reset.
Exactly.
The next time
and how does that reset look to you guys? How does that reset look to you? What is that in the
bedlam,
form of?
Social mayhem and pure bedlam, grid downs, and major distraction events would be my
Who's going to be the hero of the new Bretton Woods 2.0? Because it won't be the U.S. post-World War II.
Multipolar, it has to be.
Multi-dysfunctional?
It will be dysfunctional for a long, long time, but there will be numerous nations, and they'll probably be haggling for a leading role. It won't be, you know, America was recognized last time as, okay, you're the big guy in the room now.
Yeah.
No, it'll be a basket. It'll be multi, but there will be two sides to it. I think it'll be the BRICS side to it, and there'll be the Western world side to it, and there'll be who was going to win there. I mean, and that's again, I think, back to sound money, back to gold, back to having some kind of support there, maybe some kind of digital element to a new global currency, something that will also help erase that kind of debt. I completely agree with you. We are at that point with the debt in the debt cycle, absolutely, and some will be deflated away, some will be forgiven, some will be inflated away as well. And I think the inflationary part of it also, that they're going to see for an extended period, that inflation will going to run high. I don't see hyperinflation. I do see that you can have a period of stagflation, that where all these things starts to come out after you see the Fed or whatever come back in, try to save the day again with the same kind of tools, and not really understanding that they're going to create another kind of outcome this time. And then you will see the bad things in the societal in society as well. But that is the moment. I think that is what I fear the most about the whole thing here, is that it needs some time for realization there, and what are the fallouts going to be of that before you get to that point? How bad will the societal consequences going to be before you actually see that we need to sit down, they need to come together and realize we have to have sound money again, and that's where it all starts. Because if they don't, we will have a societal decline.
Want to stay updated on the future of finance with exclusive content, giveaways, events, and more? Scan the QR code or click the link in the description and leave your email address behind.
Yeah, I always compare it to a bit the moment of the Matrix when you have Neo that is walking on that street. I'm not sure if you remember that scene. And then there's like all those protagonists. No, the protagonist starting to basically hit against his shoulder, because the Matrix feels that you're about to act against it. And now the Matrix could be maybe the dollar system, right? And now this dollar system is screaming, right? Because it's basically being disentangled from where it basically had its roots and all that. But the big question, and that's kind of like also what the BRICS is trying to answer, but not always in a maybe good fashion, maybe, because there's maybe lots of intricacies and details about it, is which will be the currency or currencies, because the renminbi is pretty trapped in its own jurisdiction. Will it be the ruble? It's kind of the same problem. The yen, well, it hasn't been doing well.
I don't think it's got to be one.
Exactly.
Basket,
So, so then the question is then, how will the system look like, and what will be needed to actually even come to that step?
I can't imagine it'll be smooth and transparent and eloquent and cooperative in a John Nash, beautiful mind kind of way. There was a great book that came out in 1911 by the president of Cornell University. This school was founded in 1865 after the U.S. Civil War, and it was about this notion that what if we had a central bank like the French did in the 1780s, the National Assembly, that printed millions of assignats to get out of debt? What if America was ever that stupid? And he showed how the French tried QE 1, 2, 3, and 4 in the 1880s or 1780s, and he showed that this led to temporary euphoria, then permanent ruin, which Hemingway later described in the exact same way. He gave an historical example of something so absurd. And then what did that lead to? It led to extreme centralization, the deluge, Napoleon, control, and a false savior, and war. And that was something he wrote in 1911. 2 years later, the Fed was created. And then you
been
fast
on that
forward,
journey ever since.
And fast forward a century later to where we are today. And this is this thesis, and it does come back to how to invest. Because I've said without exception throughout history, from ancient Rome to 1789 to today, there is no exception when a country's got its back against its debt wall. That leads to a financial crisis, a currency crisis, an inflation crisis, and then centralization. That's how we can slow dip into crypto tomorrow and stable coins and CBDC. But it also has an effect on gold, and it also has an effect on how things transition from the sublime to ridiculous, how it becomes messy first. Napoleon made things clean, but also very messy, and there was mess before that. What we're seeing now, I think, is more centralization, hiding a sheep in wolf's clothing, or a wolf in sheep's clothing, excuse me, with these new technologies, these new solutions, these new fantasies, these new, digital highways, and these new technologies are going to save us, and these new tokenization of things, which is just crap. most of it. And yet it's definitely more transparent and more efficient. And yet it has a lot to do with our privacy and our efficiency. And that goes back to what assets are yours, where you have less counterparty risk, more trust in your own control over that. If your Fed or your central bank won't gold back your currency, what can you do? What other assets, hard assets, can you buy to protect yourself if your government won't? How do you become semi-autonomous within your own country code or zip code? Regardless of what the banks do, or the politicians do, or the parliaments do, or God forbid, your private advisor tells you to do. There's something, Kenny said, there's something immoral about abandoning your own courage. When you become informed about these cycles, the history and the math and the signals, again, it doesn't mean gold's the only thing, but they all lead to these kind of barbaric analog pet rock assets that hold their value better than paper money. And that, again, I have clients from 90 countries. They're not tinfoil-headed kooks. We have very high minimums. They're fairly sophisticated. Some of them are bankers and hedge fund managers. Can't give their names. It's very ironic when a major banker from a major city holds more than $5 million of his money in our vaults instead of at JP Morgan or Morgan Stanley. But again, these are just all anecdotal examples of what it's going to be messy.
Yeah.
The fiat system is failing. That's why gold's rising, not because it's gotten shinier. It's because paper money, because of debt, again, that major ripple effect starts there. Everything ripples out from that. People don't trust their currency, they don't trust their government, they don't trust their counterparties, they're outside of their or within their country, and they don't trust their money. And so they're repatriating to physical gold, whether they're doing it from the COMEX, from GLD and SLV, which is now run by JP Morgan, another irony of ironies, and they're doing that with their own physical gold. It's not on a blockchain ledger, it's just in a private vault somewhere.
And that's also fascinating to see also like the way there was also already the trend before this deglobalization and this more localization of the economy, which I think is also maybe interesting that we address. And also with, on top of that, the layer of the Trump factor, who is basically slapping around with his tariffs, which one could argue as a nothing burger because it's just basically his way of the art of the deal, or to get basically what he wants. How do you see this? How do you see this projection? Because you mentioned that inflationary periods are ahead of time. I think we can all agree on that. But how will the economy change in its DNA globally? How will world trade be affected by that?
As a result of tariffs?
Tariffs is one factor, obviously, that I would say propelled this. But
I'd like to address the tariffs because I'm seeing a lot of headlines, and I don't know if it's particularly left-wing media, but consumer is nervous because of tariffs. The consumer's not doing this because of tariffs. And those are nonsense headlines. This is a recent policy that he's put in. I'm not coming in to bat for Trump at all. In fact, I think tariffs are going to be inflationary. Inherently, you're making the lowest cost producer to your imported the goods that you need, that you are importing, more expensive, so that government, one of the least efficient spenders of capital, now has an extra cream scoop, and they're going to take it. And what have the Chinese responded? They're going to tariff American energy. So if any energy that comes from America goes into the production as part of a production input, it's going to be more expensive going in. The Chinese will take 10%. So that product then gets manufactured using, let's say, some gas from Houston or some oil from wherever. That component is going to have higher production inputs, and the government in China is taking an input. It's actually a taxation of your own citizens, a tariff. The goal, or supposedly, the noble use of tariffs was a counter to somebody who was doing what was called dumping, which is where they were stealing market share, selling at a not-for-profit basis. And that was the only justifiable means for tariffs, an equalizer. China isn't dumping. Walmart has been fooled with goods, they're making normal profits. But if you're going to make them more expensive, they're not going to squeeze their margins for you. The tariff goes straight onto your consumer. So it's actually a tax because the consumer will pay more at the store and the government has the flow. And in the Chinese sense, the Chinese government has a flow. So the American consumer will have then been taxed by the Chinese government and the American government and pay for that good with all these extra tariffs filtered in. So you're going to see further stagflation. Their disposable income will go down further, and you're going to get your second wave inflationary effects as a result of this. And at the same time, the only noble thing you could say potentially comes out of that is if you make it so expensive for those Chinese imported goods, you might be able to get American workers to produce that same good at a similar price level or quality. So you could reshore some manufacturing. And I think that's a little bit about reshoring manufacturing. I made the case for you should never lose all forms of a manufacturing base. So there's a bit of that. And it's a tax take for a government that's running out of income. It's important to remember, and has to cut expenditure on account of the debt market's rejection of, sorry, you can't put that amount of money on your credit card anymore.
I align myself pretty much with what you're saying here. I think there is the primary isolated effect of a tariff is inflation, obviously. And I think that you will see then that will bring upon a downward pressure on consumption. Because as you say, prices will go up. There'll be things that we have to produce ourselves, or US or whoever it will be, they'll have to produce themselves, and they'll be at higher prices, a higher cost, and that will bring on a lower demand simply. So by the end of the day, whether it's higher prices or it's lower value for the consumer, you will see that will bring some bad things to the consumer. And you will also, if we learn from history, we saw what happened in the 30s also, we'll see that if we are heading into a recession also, and you put this on, I mean, there can be good reasons why you want to put tariffs on things that you want to protect certain areas of your economy, of your industries. But if you do it on a more broad scale basis, that will put a lot of pressure on the economy, and I think that can exacerbate the kind of effects that you will already see from the deflationary bust that you can see. We saw that in the 30s. We saw Hoover coming out doing exactly the same, putting it on. I think it was sort of 20,000 products or something like that, and it actually created a lower income for the federal government by the end of the day. So. This about that it creates an immediate effect, but it's not, we live in a dynamic world, and people will start to substitute these things away from, okay, then I can buy avocados from Mexico, I'll buy something else because the American ones are just too expensive, so we'll start eating, I don't know what else. So I think the long-term effects of this will be bad if we look at it in a general, just put tariffs on because we want to get some income for the government. I think that is going to backfire, and it's going to backfire on the consumers. I agree with you there. But obviously, yes, there will be reasons why you can tariff certain industries, and there will also be reasons why you should just outright block certain industries from, especially a place like in the US, from the tech industry, and not doing what had been done for so many years, simply almost letting the Chinese steal the industry, so the technologies that they, not just from the US, but from the rest of the world. I mean, you had to, the policies there are absolutely not acceptable. So I think I understand that kind of the dynamics, but I don't think tariff is the right way to do it. And I think also, as I try to say it, I also have a trade deficit with my local grocery shop, right? I go there buy groceries, but I do it because I think it's easier to go buy the eggs there and the milk there than having my own cow and having my own chickens and producing it. I'm just saying I could do that, but I'm using my time on actually doing what I think is best at, earning some extra money there because I focus on that, and then I go spend my money there. Will it create a deficit for me? Yes. Is it a problem? No, not as long as I got a decent income on what I do. And that's where I think the US situation is, that the dollar is so strong. So why would you want to put yourself in a place where you are having the strongest currency in the world? You can go buy cheap stuff out there, and then you can actually produce it, whatever you're good at back home. I know it's a theoretical thing, but it's also why would you want to protect industries that may not have the ability to survive by themselves.
Typically you have tariffs to protect your manufacturing, but we don't have manufacturing because we've offshored that. That's an irony. So it looks more like a weaponization or a desperation than an actual protective tariff. And that's the great irony too. I mean, when John Deere, I'm from the Midwest, those are their famous tractors for our farmers. They're made in Mexico. Many of them are made in Mexico. Our iPhones are made in China, the components. That's a very big Apple product. So who are we really, what's the real incentive here? I agree that the tariffs, history does rhyme. Hoover, McKinley tried it in the earlier century. Smoot-Hawley, that Tariff Act, both of those senators lost their seat. Hoover didn't get reelected. We lost on exports. It was a failure. Now that doesn't mean this is, but I think it will. But what is it really about? And I'm not trying to apologize for Trump, but I think the real motive on these tariffs is reshoring of jobs, because who he's really punishing are the executives of the American C-suites who did offshore labor to Central America and Asia. All right, guys, if you want those products to be sold in our Walmarts, you better move labor back, and you're going to have to pay more. I'm all in favor of that. The problem is that's extremely expensive. that's going to
It's short
induce
term,
more.
and it's short term, because if you look at the AI development that we see right now,
Yep.
a lot of these jobs that you're trying to maybe insource
Yep.
will be taken anyway. So it's like doing
And
something
it's
that
reverse
is
globalization,
Yep.
which means globalization gave us this golden era under Greenspan
Yeah.
of incredibly low inflation and asset price hyperinflation. We got a super pump stock market because everything was cheap and everyone had investable. Now that's the daytime. The inverse is the nighttime.
Yep.
You have incredibly expensive, relatively everyday goods, and your hyper overvalued assets come way down
Yeah.
because there's not the same disposable to support those asset valuations.
Yeah.
That's your night for your day.
Yeah.
In fact, if I can add an extra element that might take the discussion a little further, the interesting thing is, how do you profit from this and how do you trade it?
Right.
And I'm sitting here and I'm saying, the military industrial complex for me in America is a short. And I've been almost 25 years, but a 20-year bear. I stood in the master investor in bull, on the military industrial complex. You've seen Lockheed Martin, it's next to the Mag 7 in how much they've gone up. I even gave in Europe BAE, which was a UK one. I stood on a stage and gave that as a trade, and someone in the back said, I know people in BAE, it's a shambles, it's run terribly and all of this. I said, it's not a comment on how well it's run. It's about the wall of money that is being thrown at it. And it's not about their competence. This is not necessarily a competence company. This is an industry-wide that is having surveillance finance world prepared for us through the military industrial complex and is getting statism money. An inefficient bureaucracy is giving money to a near similar inefficient bureaucracy that is the military industrial complex. If you go into a cycle where Trump is now suddenly talking to Russia and China and saying, hey, we should spend half on what we do in the military. Why is he doing that? Because he understands the credit card's been pulled, point number one. Point number two, he spends way too much on defense, much more so than China and Russia do proportionately to their GDPs. And he knows he has to do it anyway, so he's trying to secure a deal that makes him look good for being a peace guy. Meanwhile, it's only now that you can't spend that you found your principles of peace. It's pragmatism, it's not. That's what he was always about. In 2016, it wasn't his message. So you've got to look at Halliburton, Lockheed Martin, BA. We did a list of them, and we're seeing the technical verification also coming. These guys are going to get right-sized. And if you're China, you're not going to start buying Lockheed Martin product. They have their own champions. They don't want some sleeper chip that's reporting in and can be switched off or overridden. When it comes to such a sensitive product, it's only allies that buy in Lockheed Martin or made stuff. China's not going to be a supporter of it. So if you think they're going to be bigger buyer or a bigger spender in the future, these companies can't be providers because they are nation state compromised inside that silo. What happens to the military industrial complex when America goes through the right sizing process? It can only go down, and we've watched those same incompetence that I was being told by the guy at the back of the room now start working against them, and they get the money withdrawn that they're no longer used to having. You're talking about a right sizing of a mollycoddled industry that I'm going to be as happy as a clam to short. To the downside, and there you're going to find the inefficiencies. And I remind everybody of the F-35 fighter, which is for 10 planes, 1.1 billion, and you get 9 hours of maintenance for every hour of flight you actually get out of this damn thing. And you have super specialists, and that's not even the aircraft carrier going version of it. So when you see what's been sold and bled on and what the American taxpayer has paid for, and you recognize that that party is ending for those people. Think of all the consultancies, Booz Allen and all of them that deal with the American. That you should be looking for shorts. You have your gold as your perpetual long, and you have other shorts. Oil, the consumer is wrecked. I'm getting alpha today on being short oil. We've got a gold long short oil. It's a delta commodity neutral trade, and it keeps paying. So this is some of the stuff I'm hoping the audience watching this will be interested to hear. There are things you can do to build alpha and wealth, and we love talking about that aspect about it. And that's kind of, I thought I'd just escalate the macros. We were almost all in agreement broadly in where things are going. How do people react and what should they do? There's some ideas for them to play around with.
And you also mentioned so that's the military-industrial complex, and it's also maybe tied to the U.S. Hegemony, right? We see now Trump wants to basically, as you said, cut costs, make everything smaller. The U.S. Army is pretty much 150 bases spread across 150 countries in the world. Yeah, that's very expensive, just fuel, wise to keep it afloat.
Yep.
So obviously, like now we see that Trump wants to make the war in Ukraine, the Ukrainian Russian war, put to an end. But then in the meantime, we've seen like just a Chinese tanker cut some telecommunication cables near Taiwan, and we might actually smell a flare. Okay, there's something that might happen on the Chinese front. The Chinese themselves have been trying to cope with quite a downside economy where they've been putting the steamy machine like on high turns, but hasn't created anything. Hugh Hendry, which was supposed to, by the way, be here with us today, but it was a 36-hour flight for him, could not make it, maybe next time. He was telling me, like, if I see something with his beautiful Scottish accent, it's going to be a deflationary shock coming from China. What do you think?
Well, I know, Henrik, you've got a very strong deflation view, you know. So, I mean, we'll start with you, but I'll give you my thoughts.
I think, you know, whether it has something to do with China and Russia and the Dragon Bear whole discussion there, I'm not so sure. I think it actually has to more do with the whole the explosion in valuations that we have seen over the last many years, and what, you know, again, mean reversion and all that, and it will come back to ground. It needs to. So I think that is the part that we'll see there. So talking about, you know, Russia and China there, I think they're sitting and waiting for what is actually happening right now, and they are. I mean, they love the kind of, you know, discussions we now have in the Western bloc, right? Yeah. And that we can't, you know, seem to be agreeing on everything right now. So I think that, and I think that there have been many meetings between, you know, Putin and Xi, and it seems like they were also, you know, potentially expecting something like this to develop, that we will get into a situation where commodities again will be important, maybe gold will be important, and if there's something these two countries have, they have, you know, a lot of commodities, and I think that can be in the next phase here actually very important, and the BRICS countries in general will be very important, because if we get into a cycle here like what we are talking about, an inflationary, I see that we'll come to the next phase. We come into an inflationary regime now in the world. We can actually show that in the yields levels, working with momentum, that, you know, this will actually be a winning strategy. So if they continue, I mean, focusing on this and maybe even establish, you know, whatever kind of trade networks around the world and whatever they try to figure out, while the Western bloc really can't figure it out, then I think they can gain some ground. And you will see then that there will be some, I think, geopolitically moves from some of these players here. The Dragon Bear, they're going to move in on the areas where they have, you know, interest. We know Taiwan, we know Ukraine, we know elsewhere in Europe, and I think that is the power play that is at stake right here. That if we don't get this right and we have a deflationary bust and we see some kind of fallouts from that, we need to get together really quick and understand that it's a bigger thing than US versus Europe or whatever it's going to be. It's actually the culture, the way we've been living for so many years, against something quite different that I personally don't want to trade for.
I think the geopolitical speculation is very difficult, especially in a nuclear era, about when you talk about conflict and war. And again, going back to a simple example of Hemingway, who said, when you get into a debt crisis, when you have this kind of orgy of debt, that's just very classic of every kind of empire, democracy, monarchy, whatever you want to call it, throughout history, you get that temporary prosperity, you get the permanent ruin of currency debasement and war. Well, that was said in 1940s. We're now in a nuclear era where Clausewitz, who said that war is an extension of politics by other means, that's a little more difficult when you've got nuclear warhead submarines and different types of technologies that I'm not an expert in, but I think plain saber rattling with China and Russia financially makes sense, but doing that militarily is not really an option to me as a non-military expert. The question, though, is that even an option? You know, we are at that late stage empire. We have a debt to GDP of 120%. Every mathematician from business school to grad school can tell you, and this again goes back to David Hume in the 1750s, Reinhardt and Rogoff today, you cannot grow once you cross that Rubicon of debt mathematically. There's nothing you can say or do politically, left or right, in front of Mar-a-Lago or on a beach, whatever you want to say, whatever you want to wear, you're not going to grow until you get that debt to GDP down. And part of our biggest debt, part of our biggest expense is our military, our entitlements, and our interest on our debt.
Yeah.
So that's 140% of tax receipts. That's just simple math. We can speculate on war, speculate on this and that. We are not going to grow. And we can talk about the difference between our economy and the S&P and the NASDAQ. But as an economy, we're not going to grow until we cut that debt to GDP down first. And what do we have to cut? Are we going to cut? Can we cut our interest rates?
No.
Can we stop issuing IOUs? No. Can we cut our military and stay elected? Can we cut Social Security and stay popular? Who's going to make the decision that if we were in a family with our wives and one of us just lost a job and our kids are at Harvard and one just wants to go to, wants to buy a new sports car and wants to take a vacation to Miami Beach, we're going to say, well, we have to say no to that, honey. Can't do that. We got to get more productivity. I mean, the kind of common sense things you do in a family when shit hits the fan. Politicians can't seem to do that. They can't seem to get or stay elected by telling the truth that we've got to go through austerity. Ed Dowd said, if you want to see if Trump's really going to help make America great, we better hope for recession. That means he's doing the right thing. Because we're going to have austerity like a family would. We're going to have to face some pain and talk about it honestly. Where are we going to cut? Where are we going to solve this debt to GDP so that we can grow as an economy, so that when our market does rebound after a mean reversion, it's based on fundamentals as opposed to just dopamine from the Fed.
Agreed.
Because another dopamine rush by the Fed isn't going to be supported by the rest of the world anymore. They're not going to want our diluted IOUs and our diluted dollar.
And you see it also in the US Treasuries, right?
Yeah.
The Chinese have been selling them off. Even the Japanese have been doing that. Russia already since 2014.
Our biggest buyers traditionally.
The markets are actually saying out loud what no one wants to say in a way, or like basically are correcting what the US government, or in that case the Fed,
And you've
is
got
also
very
doing.
obvious proxies like Cayman Island. The Chinese have a saying, wait long enough on the banks of the river and your enemies will come washing by. And the truth of the matter is China doesn't need, and I'm not putting forward China, I'm not cheering for China. It's not my guy in this race. I'm just saying they've got the patience and they're on the better side of the mathematics. Russia is definitely on the better side of the mathematics after its debt, after its debt write-offs. And America is the one now looking at the perestroika, glasnost experience. And they're going to get ever more frantic trying to do things, and the others just have to step back and let it all play out. Because no matter what you do, whether you turn left or turn right on this oil tanker, it's too late. You're already in the shallow water. You're going to hit something the minute you change course. You almost may as well leave it to go straight, and you hit it
Do you think there's risk of using war as a distraction to blame that tanker hitting the ground instead of blaming it on your own steering?
There will be distractions. I can see the distraction narratives playing out. There might be a temptation to use the military while it's still big to try get a better outcome as part of the distraction aspect. But at the moment, he's talking peace with Ukraine. I fear for Iran a little bit. I have my own views about who's, under whose influence Trump might fall under before that, and so I would be worried if I was an Iranian. But if they don't do anything now, they're going to be a smaller military power. And the last thing always was they could assert their dominance on account of military power. But if you corrupt and you rot the financial, you lose that in the end too. And that's where we are. And that's why this cycle is better. And Henrik used the phrase of super cycle. This is a macro ending super cycle. And it's not just the 40-year from Volcker high rates debt cycle. This is right back, Bretton Woods. And I think this is the largest synchronized, because what we've actually done is, you had the Great Depression of the 30s, but largely different nations were to a degree insulated to some element of this. You now have a totally interlinked, worldwide, synchronized collapse where there is no Western nation.
Led by a nation that's economically lipstick on a pig. Because let's think about this. I'm curious about what you guys think. Let's just even assume a magic wand. We have world peace from Gaza to the east, to the South China Sea, to Kiev. That's gone. World peace.
Even between Americans? I mean, Democrats and Republicans?
Even
wow.
Kumbaya Love Fest in D.C.
Exactly.
where there's a big barbecue in the front of the White House lawn. And that's also, we don't even have a recession.
Yeah, fantastic.
And even our market never mean reverts again, just kind of hovers along at an annualized, Jeremy Siegel 8% a year. Who's going to buy our U.S. Treasuries the way we spend? So take everything else out and just look at this simple reality. Who's going to buy Uncle Sam's IOUs? And if he doesn't, if no one else does, just by world peace and love in the world, who wants an IOU from an over-indebted issuer?
But that's modern monetary theory. I mean, they gave Bernanke a
Nobel
Prize for that. So
Right.
why are you even asking that question?
So I'm saying, exactly. So how do we get out of this? We're not going to cut spending.
No.
We're not going to quit spending more
No.
than we earn.
No.
We're going to go to treasury auctions soon with trillions that have to be rolled over, and there's less buyers from China and Japan et al. So who's it going to be?
But it is a situation like after the Second World War. I mean, where the monetary system was just in a complete mess, and I think that's why the monetary reset at some point where. But there needs to be a crisis for that. You don't get them to sit down and say that, because we live in this kind of regime that we have now.
But the cutting brings the crisis. The actual recognition of the problem and the reaction is the final thing. It's almost like an old man who's got used to smoking 40 a day and is suitably toxified, but his system has got used to it, and he's 87, 93, whatever the hell it is. And you show up and you take his fags away from him. And you say, we're doing detox, here's your green smoothie in replacement of your cigarette. You're about to kill him. Actually, because what happens with the cuts is, just think about the military-industrial complex. You start cutting, they'll never do the full cut in first swing. This will be 5 or 6 swings of the bat. People are going to, over time, realize it. It's how you introduce poison into a thing. You don't give the whole shot. You drip feed it in. What's going to end up happening? Who's going to employ soldiers? Who's going to employ all the captain who flew an F-35? Who's on the payment that he was probably getting? Who's going to employ? All these people are going to flood in. Then you talk about other status jobs. You talk about all the consultancies between the military industrial. You have all of this skill base coming in. What do they go do? They aren't all coders and going to start writing you AI. And I'm sorry, it's going to happen. And then at the same time, they're all going to go on welfare just when you least need it. So the minute you start doing the cuts you need to do, you actually add to your welfare bill. You make it worse. Because you're taking duff jobs out of the system. When you take the transgender consultant and the person who teaches certain people how to put condoms on, and all of these people on 60,000 years salary and all this cultural Marxism, all of those get washed out. They go on welfare. They're not going to start a corporation, a small business and a corporation, and that's going to lead to the contagion. That's your smoker dying because you took his cigarettes away, because his body had become systematically functional as a 20 cigarettes a day guy, and now you've just freaked it out when it just had its cool little groove that it would found a way to run on and would have run on until he died. You just knocked him over. And that's why I can't see a way out of this. And it sounds doomer, but actually there's great opportunities to build wealth in it. There's great opportunities to save your family members and friends by not riding the downdraft, the break of the wave, and getting dumped and having your head smashed into the coral. Don't do it. Step back. And I think that's such an important message, but I don't hear it being put out. And I'd love to have criticism of my hypothesis, but every time I stress tested it, it feels right to me.
The problem is that it's been said for so long. So you have had Jim Richards writing the book since I don't know how long about the end of and it hasn't been happening. So when you look at the people and they say why isn't it happening? I mean I've said it told my
people are anesthetized is what you're saying by the cry wolf multitudes.
Yes, cry wolf enough times, and then you'll say okay. So and that's why I think the most people will not realize that this is gonna.
But the shoes are really dropping now. That's the real difference.
But but then again, if you have as I say, blow off top, then we'll say, well, they didn't happen this time. I mean, if blow off top for me can last for 3 months, so it's not like it's going to last for years. But you will still see that people will think, well, again, doomsday, and it's not coming. So what are we afraid of? So I think the crisis, there needs to be something that is so recognizable to people that will say, okay, now we really see it. Before you actually will, you'll get them to move, because they'll
being
move.
weaned off his opium right now. And that's happening. And you've got this Trump Elon doggy is the first political recognition that you can't spend anymore. And that literally is taking the cigarettes away from the old man and the heroin from the junkie without substitution. He hangs himself in depression.
To conclude, because you also have your own interview to record in a few minutes, so you have to decide as well, like when you want to make a call out. But we'll round off anyways. And I think on that note, that's also a very good bridge for the next session, is about the gold revaluation thesis. About when we listened to Scott Bessen's words a few weeks ago, saying that they will look at the books of reevaluating the asset side of the United States, which is pretty much just gold. There's the 7 8,000 tons that allegedly are in the about to be audited Fort Knox.
8,000 tons,
Or 8,000.
Yeah.
Thank you for the precision. That actually gives a bit of a pre-taste of what actually comes next. Some speculate, like Willem Middelkoop, which I saw a few weeks ago, was actually saying this is the beginning of the invisible ink writing of the gold standard that reemerges in this system. So what are your thoughts on it? And maybe just keep it short for everyone, and then we can
obviously,
round up on
as a
that.
gold bug, you'd think of reevaluation. I think desperate times require desperate measures. If you look at the $42.21 certificate value of gold, if we have the 8,100 tons, it's 11 billion based on the $42 price. If we went to mark to market, we're looking at 757 billion.
Chicken feed.
Still chicken feed against 37 trillion in public debt. So again, does that mean we're going to a gold? We'll talk more about this tomorrow. I'm saying that is desperate too. That's just QE with gold. It's just okay, and that's kind of, I understand. That's not going to solve the problem. Even if we revalue gold to market, then you could say, okay, we had 757 billion. That's just a few months of QE during the Great Financial Crisis. That's just 2020 and the first few quarters of unlimited QE. That didn't really change the needle much. So even that, I don't think is going to solve the problem. When we get to whether we'll have a gold-backed world reserve currency, and that's a much more nuanced question. But I'm saying the very fact that we're looking at auditing gold and revaluing gold shows how broke we are. The very fact that we have a Bitcoin stockpile is a proof of how broke we are. The very fact that the COMEX is a revolving door of stand for delivery, get it out, because the COMEX isn't even a physical market, it's a credit market. But now the counterparties want physical gold. That shows how bad things are. The very fact that JP Morgan is running SLV and GLD after being fined for fixing that market shows how bad things are. So again, these are all desperate things. There is no easy solution to 120% debt to GDP, 8% deficit to GDP, and a country that cannot stop spending beyond its means. It is a meth addict with debt. And it cannot get fixed easily. It's going to need some serious detox, some serious tremors, months and months of pain, some real dietary restrictions, and hopefully no fatal reactions. But again, it's not gloom and doom, it's math. It's history, we cannot avoid it. To your point, cry wolf? Yeah, we've been crying wolf, but the dollar's been losing against gold steadily since 1971 every year. Sure. The gold up 44% year over year from February. Silver 48%. Are you not entertained? What more do we have to do for you? It's not being discussed. It's not a gold bug case. I was a risk asset guy. I was stocks and bonds. I was a total .com millionaire. I mean, I want to say millionaire, yeah, but I was a lottery ticket winner, an idiot, and that was easy. But gold is even simpler. And it's not gold bugging. And I don't know why this is so hard and why it's so deliberately misunderstood by the Wall Street industrial complex and the registered advisement industrial complex. It's fascinating to me.
You're just a boomer. That's what everybody will be saying, right?
Yeah,
so it's
just
a boom. You have to understand it's with Bitcoin, and you're just a boomer. That's why you're looking at.
Well, I can answer that question because gold is an anti-fiat, by definition, also an anti-debt-based instrument.
Yeah.
And the whole system that these people all live in and profit from is the debt-based system.
Yeah.
So you're talking about truth when people are living a
lie. And they deliberately hate to see gold rise. That's why they deliberately misunderstand it and ignore it.
100%, and that's why it's being treated like that. And there's no one who profits, you see, to sell it. You know, it's not an insurance broker who's earning a commission check to sell you a fancy product with an ETF and a policy and an endowment. And
you can't turn fees on it in the same way.
It is. There's no gold board that markets it and runs ad billboards on the highway like you get. I drive in Florida, 7 years mortgage to pay off of a F-150 truck, and you then still owe 40% balloon payment. That's what I see on the freeway. I don't go, hey, you should be buying gold.
Yeah,
you know, so that's why, because it doesn't enrich the participants in the game.
Yeah.
So I would call it a session packed. I think we talked about a lot of things. I hope for the viewers as well that you had a lot of things that you could take away from this session. Thanks a lot. We'll be recording tomorrow morning a session exclusively about more like asset-based gold, crypto, commodities, housing. We'll talk all about assets. Yeah. Thanks a lot, and thanks for watching. And don't forget, if you want to win 1 free gram of gold, that is putting you one step closer to away from fiat debasement, just comment GOLD gold in the comment section. Thanks for watching.
Want to stay updated on the future of finance with exclusive content, giveaways, events, and more? Scan the QR code or click the link in the description and leave your email address behind.